Hello, everyone. I'm Jared Hall. It's Monday, January 13th, 2025. Welcome to the week ahead, our weekly market video update where we unpack last week's market action and touch on key events that may be impacting the markets this week. Following the declines that ended the month of December, the S&P 500 index fell 1.94% last week as data showing stronger than expected December job growth curtailed hopes for interest rate cuts this year. Last week's move came in only 4 trading sessions as the market was closed on Thursday in honor of President Jimmy Carter's passing. Government data last week showed the U.S. economy added more jobs than anticipated in December, while the unemployment rate unexpectedly declined. Non-farm payrolls rose up to 256,000 last month, surpassing Bloomberg's consensus estimate for an increase of 165,000. The unemployment rate fell to 4.1% from November's 4.2%. Analysts expected the rate to stay even at 4.2%. This seemingly good news and the subsequent market reaction tells us that once again, all eyes are on the Fed. The markets are not looking forward to rates remaining elevated. Looking ahead to this week's key events, the market will unpack the other side of the Fed's mandate, inflation data, with the December Producer Price Index expected on Tuesday, followed by the December Consumer Pricing Index on Wednesday. Later in the week, December retail sales are due Thursday, while December housing starts and building permits are set to be released on Friday. We expect continued volatility this week, with futures indicating a rough start on Monday as the market attempts to reprice the outlook of policy rates. We wanted to finish off this week's video with a brief note on technical analysis of the S&P 500 as we enter this pullback phase. The current drawdown is 5.17% from all-time highs. This is fairly standard, and in fact, the market experienced similar declines twice in the last 12 months, so perhaps this fact will give you some resilience. Looking at the technical chart, we want to highlight a few other things. Number one, watch the 20-day moving average in green, how it's crossing the 50-day moving average in orange. This is the key momentum shift indicator and tells us to expect volatility in the market. Notice the last 2 times it occurred, how elongated those candles get. The second thing to watch is the relative strength indicator, or the RSI, down below at 36.6. When this indicator hits the 30 line, that tells us that the market is relatively oversold and lots of investor panic has already been set in. It doesn't mean that a bounce is certain or going to occur, but it tells us we've definitely reset the momentum of higher prices. The third and last thing to note is the big red box we've outlined. We would consider this our support box, meaning in this area of past trading, we would expect the market equilibrium to reset, where buyers start to step back in and support the prices at this level. Currently, it's a wide range between 5,575 and 5,700 on the S&P 500 index. It is of note that this is still 1.5 to 3.5% below where we are currently trading. In summary, we would encourage investors to remain patient and stick to their long-term strategies. This is a standard issue market drawdown for now. That's all for this week. Be sure to follow along with us for more content like this.